The hard work begins when you engage the investment professionals that run the investment portfolios. So, how do you get your financial advisor on board, or your chief investment officer at your foundation, or the investment managers that you would need to work with as you set your investment policy? We tried to do a starting point by translating some of these solidarity economy impact investing opportunities to you, to translate them to the asset classifications that your investment advisors might know. So you probably have public equities that are large cap, you have US, and you have international or emerging markets. You have different, perhaps private equity allocations, or you have a significant amount of bonds in your portfolio. They may be different municipal bonds or corporate bonds, or in all bond markets. What we are trying to show here is that there actually are impact opportunities across all asset classes. The challenge is your financial advisor will most likely only have heard of two types. And these are usually in the alternatives category. It's the community development financial institutions, which was set up under the Community Reinvestment Act, a CRA, which rules are being revised right now. And the most well-known of that is the Calvert Community Investment Note. There's different term lengths and different terms between 1% and 5% interest, usually between 1 and 10 years. And you can buy them here. And there's more than 250 million deployed in really phenomenal work that's been done by Calvert and the likes of LISC and Enterprise. And there's many more. The other one is direct investment in affordable housing projects. And those are more well-known impact investing ecosystem. So if your advisor does know, or if your chief investment officer does know, their preconceived notion about mission-driven investing will likely be something around community development, CDFIs. And sometimes those are very small institutions, sometimes they are quite large, but in general, the interest rates can be 2%, like the Religious Communities Investment Fund, one of these CDFIs that has a 2% return on capital, and they're usually not liquid, so you can't take them out. You have a set term note. So what we want to say is that there actually are investment opportunities that do pay very different returns, and that's what we try to draw attention to in this, is that Black Star Stability Fund has a 12% net internal rate of return. That's quite positive. Common Trust is in this 10 to 20%, Good Scout Capital 20%, Apis and Heritage 10 to 20%. Addison Social Capital did better than 20%. So many of these funds that we're pointing you to actually deliver returns that are quite attractive. What's different about them is how they go about it. And these are the impact strategies. So Carbon Collective is a fund that takes the project drawdown framework that says, if we are going to get to a zero carbon future, a livable future by 2050, what does our economy need to look like? Let's take that as our starting point. And then let's build an index fund, public equities, that has the parts of the economy, regenerative agriculture, that we know are essential to us making this transition. And so let's take out all of the parts that are the most carbon intensive, the cement, the extractive agriculture, the fossil fuels. And that's what we're focused on in this fund, and still delivering an index fund portfolio that you can swap out with something you have in your public equities. So part of the pushback you might also receive from your advisor, they might tell you as you're trying to empathize with them this week and listen to how they think about the world, they will say there's not enough impact investing opportunities. And so we're trying to introduce you to the networks of the Catholic Impact Investing Collaborative's deal sharing platform that has 40 investments, Tonic, which has 100 investments on their platform. There are communities that have begun to emerge, and there are new ones that we hope we can help collectively build that get access to the many, many things that are coming more from a social perspective or an environmental perspective. And these funds are not finance first funds. They don't show up on the radar screens very quickly from your Goldman Sachs and your Fidelity and your Vanguard. They aren't built by those players. These are built by a different set of actors, and they show up in the ecosystem. So you need to be more attuned to social reality. Part of the reason that most of these funds, haven't shown up is because our financial advisors are trained to exclude folks that don't have 25 years experience managing billions of dollars. If you're a Black fund manager that works in finance and investing for 10, 20 years, you then spread on your own and you're building your first fund. You have your first year or two. And that's the case for Apis and Heritage. They've worked for JP Morgan Chase, for Goldman Sachs. They've done private equity buyouts. They do leverage buyouts. They know how to build these funds. But as a Black person building the fund, only 1% of assets are managed by Black managers today. Less than 1% are managed by women. So if you're a woman, a Black woman like Rachel Rabascati from Addisina, of course, you're not going to have billions of dollars under management. And so when your advisor says we only choose people that are not emerging managers, we only choose advisors to manage our money that have 3 years experience and hundreds of thousands, or hundreds of millions under management. So we need to be the people in our organization that say, no, this fund was designed with the environmental framework in mind, and it's accountable to that project drawdown group. And that to me is we have to take the first step. And how do you take the first step? You choose which of these, or there's many other sources that most appeals to who you are and your identity and your mission, and try to do the work of helping your investment advisor see how this is critical to you embodying your mission and what they know as your values. And so the more you have that in your investment policy statement, the more that it's clear. I think part of the way we embody our faith is we have to value our social education as much as our financial education. And I think we so often trust our financial and investing folks because they have lots of financial education, but they lack the social education. That's what I think each of us, especially given your grant making roles in the community, you're attuned to social reality. And that encounter process, these dangerous memories we just written about, that's what we need to lead with. And that's what's really, I think, most important to lead with as you're having these conversations and taking that first step, making this first impact investment, this first mission embodied investment. So I hope you'll do the work.